All right, let's give you the markets update. And the Johannesburg Stock Exchange relatively muted on Wednesday as markets awaited the outcomes from the US Federal Reserve's last policy meeting of the year. Well, let's try and get an update now on the markets and how they are shaping up this Thursday. And we're joined by Makwe Fund Managers Senior Portfolio Manager Phaswane Mphahlele. Mr. Mphahlele, thank you very much for your time. We saw the Rand maintaining its gains and opening in the green. What else is moving the markets this morning?
Good morning. The markets are moving higher this morning, and this is at the back of the Fed having kept interest rates unchanged to end 2023 policy meeting, and having to come with a surprise and becoming very dovish as they came to the Fed. Powell informed the market that he's happy that inflation is easing. However, economic growth also is slowing down. The inflation is expected to grow by 2.4% coming into the next year, closer and closer to that target of this, while economic growth is slowing down and to grow by 1.4%. And rightfully so, he has read the data well, and that they're not looking into raising interest rates anymore. They're actually looking into cuts. According to their dot plots, they indicate that they'll be cutting at least 3 cuts to be expected coming into 2024. And this was better than expected from the market. The US markets rallied for bonds, stocks, the dollar weakened, the rand was happy. And South African markets, we believed in the center rally and we jumped on it and we saw stocks opening higher by 1.5%, as supported by our resources up by 4%.
Oil prices rising in Asian trade on Thursday, extending the previous gains. What's happening on the commodities front?
Well, looking at that commodity specifically, oil prices are currently in a bearish mode, and they continue to rise, but continue to fail to rise even higher than their support levels. And this is at the back of the oversupply that we're seeing in the market, while demand outlook does not continue to look well, as we see the likes of China going through deflation, which is a great importer, and while the United States are going to also experience some kind of recession risk going into 2024. I was telling you how Powell is forecasting a lower growth of 1.4%. And putting all this together, it's just indicating that oil prices will remain cheaper in the meantime as we experience this growth downfall, and it will be good for the guys at the petrol pumps, the rest of South Africans at the petrol pump.
Let's talk company news. Sibanye Stillwater CEO Neil Froneman saying the miner could step up its cost-cutting exercise if commodity prices continue to deteriorate. Let's talk about that particular story. What's going on there?
Well, the guys, Froneman is coming out and he's being clear. The guys have a policy in place that if they do not run at a loss, basically. Projects must run at a profit. And if they experience these things, they need to take action. They've seen currently for some time now that they've seen prices falling off commodity, therefore their commodity baskets. We're talking rhodium that is at the low of 4,000, and it has been as high as 40,000 in 2021, and platinum is just trading under 1,000. And adding all this and adding with other disruptions such as low electricity supply and higher cost of inflation, they're starting to see consistent trend in margins having to be lower. And this is going to start affecting the overall sustainability of their group business. And therefore, it's tough decision has to be taken during a period such as an economic downfall. We know currently they've risked jobs over 4,000 and more is to come. And this is just, might come because of the form of when they see the supply, they're not selling their goods at a profit. They have to reduce investment in certain productions. And therefore, that means the best way to cut is to start with the jobs, because it's the safest way to do when dealing with such challenges. But however, not all is very bleak. If they can hold it out over the next 12 to 18 months, we could see a turnaround as we have done with the interest rates have fallen, and we'll start a new trajectory of sustainability in economic growth.
Yeah, let's talk Barloworld, that company also bracing for a slowdown. What's driving that forecast?
Well, looking at Barloworld, they are seeing mining equipment sales expected to fall down between 10 and 15%. And this is also very simple back of that growth development that is projected to go lower when we see the long-term bond yields down by below 4%. And therefore, we're seeing commodities are reacting to it. They're slowing down in demand because projects are being pushed away. Weaker prices are therefore driven into the market. And therefore, when you see big players like China, therefore going through some troubles with their property market, they are not willing to be doing any businesses as they see that their money supply is coming down. So during these recession periods, projects have been held off. Investment sentiment is down, and therefore that's why we're seeing this kind of focus coming up from the mining guys.
Let's then talk about Transnet, the latest coming out of that parastatal. Talk to us about what they're saying, particularly as it relates to the coal industry and in particular the locomotive spare parts, because that's one of the issues that has troubled Transnet among other issues.
Yes, well, looking at that specifically, they've seen them struggle. We have seen them as a country struggle. And now it has been having, as what we call consistent negative impacts on the businesses and the GDP. They are losing billions hand over fist. And therefore, the industry has now taken a decision that we must protect ourselves as much as we must protect our country. And they're stepping up to provide some cash to help get those spare parts, whether it is from alternatives or the same producer. Currently, we know that Transnet has over around 200 locomotives that they can't work and need to be part changing. And this move just shows that the private sector, as I said, trying to protect themselves and the government, they are building the public and private partnerships, but also highlighting that the government needs to pick up their feet on coming to these matters, because they are risking their countries losing more billions when they fail to do such services that are required to help businesses make money themselves, to generate taxes, and the people to enjoy the benefits that come with it.
Let's conclude with Fortress Real Estate Investment Head of Asset Management, quoted in the Business Day as suggesting that there is a rise in demand for older industries properties. Is this part of the trends outlook as we look towards 2024?
Well, the demand for these older, when I look at the demand of these older industrial properties, has been building up for some time now. And would it be a trend coming into 2024? We're looking at how interest rates are now are looking to get to a point of no raising and cuts. It is probably will take a shape in a higher speed. And this is because people right now are buying these properties because they found them favorable in terms of they can find them at a cheaper rate, and they're able to actually use them into changing them into residentials. We've seen a few within the suburban areas where they change them into residentials in order to deal with the overcrowding we're seeing. Other businesses are buying into them because there's just a great investment in terms of, as a business, when you operate in the e-commerce spaces, you keep your operating cost in terms of space lower. And this is true because when you see that, when you look at Fortress numbers, they're telling you that we're seeing an improvement in this type of properties. We're seeing rental income and the returns are increasing. So a trend could be building up and having a solid foundation going forward.
Phaswane Mphahlele, thank you very much for that markets update. He is from Makwe Fund Managers, a senior portfolio manager there. All right, to this story now. A Roodepoort liquor outlet in the West Rand has been closed. This is after expired alcohol and soft drinks were found during a raid. A number of spaza shops have been in recent months on the spotlight, or should we say under the spotlight, for allegedly selling expired food or counterfeit goods. Here's Newzroom Afrika's Katleho Sekgoto with that story.
For the owners of the Ultra Liquors Express store here in Roodepoort, this may mean the end of business. Hundreds of cans and bottles of alcohol, soft drinks and juices found non-compliant and expired.
The tip-offs indicated the number of non-compliances which covers a lot of government departments. That is why we've got SARS as part of the joint operation. We've got Home Affairs because there are those that do not have documentation. One example is that the employer himself who are not sure in terms of the validity of his documents. So SARS will be checking the validity. And secondly, that there's an employee that comes from Zimbabwe and that employee does not have the documents. That is why we are here, and we make sure that we are here in a joint operation. And also, we are accompanied by a number of security agencies, the SAPS, Traffic Department, and Transport Department, including the warders, or the wardens in terms of the province of Gauteng.
The Chief Inspector says the Gauteng Liquor Board has been called.
So we are going to prohibit. So SARS would either have taken custody of the place, but the alternative that we have now is that we have invited the liquor board to come and check so that it can check if